Is 24-hour trading for stocks 5 days a week going to be around the corner? It looks like that's going to be the case. Now, this has already been the case on Robinhood for at least some stocks, but this is another move that the Nasdaq is potentially looking at. And Nasdaq's president recently put out a post about this, indicating that we could see the Nasdaq move to 24-hour by 5 days a week trading. Now, this is one of those areas where more trading isn't necessarily good for all investors. I'm a long-term investor, so I don't do a lot of trading, buy stocks once a month for the asymmetric portfolio. So this doesn't really affect me as an investor, but it does affect a lot of companies that are in the market and who are making money on transactions. One of those companies is Robinhood. They have already moved into 24/5 trading recently. So I'm going to go through exactly how they make money on that currently, what that looks like, and why this could be a tailwind for the company long term. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's first look at what started this discussion. And this was a post from Tal Cohen, the president of Nasdaq. A couple of quotes here. At Nasdaq, we're ready to meet the opportunities and challenges that existing trading hours present by doing what we have always done, embracing innovation while maintaining the integrity of our markets. Says that they are excited to share that Nasdaq has begun engaging with regulators, market participants, and other key stakeholders with a view of enabling 24-hour trading 5 days a week on the Nasdaq stock market. Our timeline is pending regulatory approval and alignment with critical industry infrastructure providers, which anticipate being in the second half of 2026. So we're still maybe 18 months away from this actually happening, but this is a pretty big move. Traders will probably be happy with being able to do this 24/7, but it's also worth talking about how this impacts a company like Robinhood. Robinhood has been doing 24/5 trading for a while now, not available with every single stock, but you can see what this looks like here. Their 24-hour trading market available from late Sunday, so basically 8 p.m. Eastern time on Sunday through Friday at 5 p.m. Eastern time. And this actually goes through what's known as BOATS, or the Blue Ocean Alternative Trading System. This is the Blue Ocean Technologies site, and they talk about exactly what they're doing, focused in expanding the markets into off hours. And not everything is traded, but there is a lot of stocks that currently are traded. So how does BOATS make money, and how does Robinhood ultimately make money in these off hours? Well, what ends up happening is that the bid and ask spreads, this is the difference between what you can buy a stock at, which is typically the ask price, or what you can sell at, which is the bid price, that widens. So typically with a very liquid stock like Apple, for example, you're going to have a penny, maybe 2 pennies difference between what you could buy at and what you could sell at. But you can see this is an off hour right now. Only 100 shares are available to trade. At least this is what's pulling on Yahoo Finance. But you can see that the difference in these prices currently is about 12 cents. So that's a much wider bid-ask spread. So basically the volume is going to drop off. And as a result, the people who are actually making markets, the BOATS exchange in this case, or Robinhood, they're going to ask for a much larger spread, because that's going to be their risk, is that they're just going to be the only ones buying in the market in these off hours, and they would maybe potentially have to shut that down because they're taking a lot of risk by being the market maker. So what this could potentially do is bring Nasdaq and much more liquidity to the market. That could potentially be good for Robinhood, and this is the reason why. A big chunk of Robinhood's money is made from what's called payment for order flow. If you look at their 10K filing, this is their most recent 10K, they reference PFOF quite a bit, payment for order flow. So I'm going to just read this directly. When customers place orders for options, cryptocurrencies, or equities on our platform, we route those orders to market makers, and we receive consideration from those market makers. With respect to options and equities trading, such fees are known as payment for order flow. So when you trade on Robinhood and it says, you know what, there's 0 fees to be trading on Robinhood, Robinhood is actually making money because they're getting paid by the company, the counterparty that's actually making the market in the stock that you're buying or selling. So somebody is making money, and then they're returning some of that money to Robinhood. So let's go through exactly what those numbers look like, how big a deal this is for the company. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. This is a look at Robinhood's revenue sources. So options is in green, equities is in blue, orange is cryptocurrencies. Those are the transaction-based revenue sources. And you can see that those went up in 2021 when transaction volume on Robinhood was very high. then dropped in 2022 and 2023, now starting to recover again, partly because there's more users on Robinhood. There's also just generally more trading going on right now. So that's the trading or transaction revenue. That's what's going to potentially benefit from more trading happening 24 hours a day, 5 days a week. So basically, if volume goes up, that's going to be good for Robinhood's business. The other part of this chart is purple. That is net interest revenue. And then the other light green color is other product revenue. Those are going to be other revenue sources. So net interest revenue is going to be interest on things like credit cards, the spread that they make on cash that's actually sitting in your bank account. So they're going to pay you interest, but they're also going to generate interest from investing those things in things like treasuries. So there's going to be a spread or interest revenue that they're going to generate from those kinds of things. That's where you want to see assets under custody start to grow for Robinhood. So there's kind of two pieces of the business. You have the transaction business. The more transactions that happen on Robinhood, the more money that they're going to make from, in particular, payment for order flow. That's those market makers, some of that for those funds coming back to Robinhood. The other piece is going to be a little bit more sustainable, I think anyways. That's going to be the money that's made from assets being on the platform. So when somebody shorts a stock, they have to borrow it from somebody. You may have to pay for that. That's going to be coming from Robinhood. That's a revenue source for Robinhood. Credit card interest is a revenue source for Robinhood. Margin interest is a revenue source for Robinhood. All of these things are based more on the assets that are actually on the platform, not necessarily the number of transactions. So as that second piece starts to grow as a bigger and bigger piece of the business, I think that makes Robinhood much more sustainable. But that said, having 24-hour-a-day trading is probably going to be good for the company as well, because that will be more trading on the platform. And that's going to bring in more payment for order flow. Now, what is the exact impact going to be? We don't really know those numbers yet. But the fact that Nasdaq is looking at moving to 24/5 trading potentially by the end of next year, I think could potentially be good for companies like Robinhood that are really focused on trading. This is where one of their moves into the Robinhood Legend product, so a little bit more of a trading-based desktop platform, is going to be probably a good thing for the company as this kind of momentum moves into 24/5 trading. So something to think about if you're a Robinhood investor. Doesn't necessarily change the thesis that I have on the stock overall, but I do think this is one of those general tailwinds, is that 24/7 trading is eventually probably coming for all these markets. We're already there with crypto, probably coming with stocks and bonds and everything else, especially as some of this trading is going to start to move to the blockchain. That's going to be the next leg. Not there yet, but that's, a decade from now, we're probably going to see that too. So let me know what you think about Robinhood's increased trading from 24/5 trading on the Nasdaq, at least. Leave those comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.